Good morning, everyone. Today is Monday, unfortunately, April 20th, and today is another episode of the Options Roundtable, where we gather with various experienced options traders. They're kind enough to get up at the crack of dawn and join us for a live discussion. Today's topic is the wheel. So it's a follow-up from last week. So if you missed last week's, feel free to check it out. This one will be a little more advanced, diving into the weeds and covering some topics maybe we missed, last week. So I'm just going to start and go around the table. Audio check too at the same time. I'll go in order. I see Rob. Rob, how's it going this morning?
Here we go. How's it going, guys? Good morning.
All right, you're kind of low, but you're probably half asleep, and that's understood. Parabolic, how are you?
Good. Good morning, everyone. Glad to be here. Looking forward to the learning.
Good morning. Double D, you getting ready for work?
I am getting ready for work. It's Monday, so one of my top 10 favorite days of the week.
Alan, how are you?
Doing good. Coffee cup's half filled, so that's a problem, but doing good.
Yeah. Well, feel free to jump off anytime, get a refill. SB, good to see you return.
Good morning, folks. How are y'all?
Hanging in. Best day ever. Is it the best day ever still?
It's the best day ever.
All right. Thank
You're
goodness.
breathing, so
We need a best day ever. Real quick, Bitcoin update. It's down, but barely. I mean, who can be mad at this point after the run we had? It's at around 75K. The indexes, S&P is down 0.46%. NASDAQ is down about 0.5%. Dow is down 0.5%. And the Russell is down 0.82%. Now, let's just jump right into it. Made a post in the Discord last night. If anyone had any questions. So I'm just going to pull those up first. This is from Pilot Fish, another YouTuber. Shout out to her. She brought up a question. How do you manage trades that work against you? Whether it be, I guess, calls or puts. Maybe we'll start with if you sell a put. Obviously, the idea in most cases, not all, obviously, but you're not looking to get assigned, especially, you're really not looking for the stock to tank on you, and the market to just collapse. So how do you manage that trade when you sell puts and they're so deep in the money and you're about to get assigned? What do you do? Is anyone dealing with that now, or has anyone dealt with that in the past? And what do you do to protect yourself or get out of it?
Well, I'll start off. I haven't dealt with that recently. So to start with, hopefully I've done a put on something that isn't going to right off the get-go just tank on me. So hopefully that's the first thing. But typically, if it's gonna, I mean, that's part of the wheel thing. If I'm gonna get assigned, I'm gonna take the assignment and then I'm gonna turn it back around and start selling calls. If it tanks on me real bad, I'm probably going to sell some covered calls, probably a little bit below my cost basis to try and make some money back up. But yeah, I mean, it's at that point, if it's that far down, you're either going to sell calls below cost basis or just sit on it, or you just got to be like, well, screw it, I'm just going to have to eat it and sell it to get out of it. So you don't have a whole lot of options there.
Okay, so go ahead.
For me, I guess the first thing you do is rolling it down and out in time a choice. Does that make sense? And do you want to try to do that? You want to try to go all the way till you don't pay anything or collect the slight something, or do you want to try to do that and even pay a little bit against it? So that's probably the first thing I look at.
So you would roll it down and strike and try to get a credit, but is there a date that you would not go too far on, or would you go as far as needed?
As a case by case basis, what's your strategy? How big is the contract? How far has it fallen? All those other variables have to work into that.
If I may ask about this, I think this is an area that is missing in the wheel strategy education that's online. It's sort of a surprise to the new person when they're approaching some of these complexities. How much are you? I know you're saying case by case SB, but is there a guideline you could give to the new person or the intermediate person for price, like how much you're willing to pay to push it out?
I don't know that there's a rule for that. I think, again, as I've done thousands and thousands of options now at this point, it just has to be a case by case basis. If I'm not really wanting to take the shares, say it's a big chunk or just a stock that I'm not as thrilled about, of course the option of just getting out and paying it and taking a loss is one. Another is to take the shares, and then just how patient can you be? Of course, Rod, you and I and half the Discord went through it with Soxel a while back. Of course, wouldn't it be nice if we'd have just kept it at this point? Of course, I don't know that our contracts were this long, but again, you have to look at it on a case by case basis. Do you want to take that $100 stock? How many contracts do you have? What percentage of your portfolio? And then you just take assignment. If you feel that there's a rebound coming and you feel good about your thesis on the stock and the sector, and maybe it's a short-term thing, maybe you roll it down and out and even pay a little bit. But essentially, in the money, put is the same thing as a cover call. So it's mathematically the same. So it's hard to say. At some point, you don't want to put too much in it, and then you'd rather just take assignment and then look for the cover call side.
Yeah, I would agree with SB just because it depends. So because if it's if you sold the put and then all of a sudden some news came out, some like really bad news, and it tanks.
Yeah.
Do you at this point, do you want to go chasing it, kind of thing?
Right.
If it's not gonna come back, then you probably don't want to chase it.
They're going to be some people placing that today.
If it's a temporary thing, then you can think about. If you think it's going to come back, then you can think about options of how you want to handle it. Do I want to pay to go down to go meet it, or do I just want to I'll get assigned and kind of hold the bag for a few weeks and then hope it comes back up and then I can start selling calls on it. Yeah,
and that's why picking the stock, in the beginning, is really the most important, because if the market's working against you, but you believe in the underlying and you think the underlying is going to recover, then whether you take assignment or whether you push out the put, you're probably okay with it because or you trust your underlying or whatever you're investing in should recover, whenever the market recovers. But if you trade something you don't like, then obviously that's not, if you're trading just for the implied volatility and the high premium, then yeah, at some point you've really got to make a decision to get out, right? And I've been there many times, lost a decent amount of money, but that's how you learn. But on the flip side of this question, what about covered calls, right? We get assigned, market's green, everyone's happy, we're selling calls, and then last week happens, boom, blowing through our calls, cappity doodah everywhere.
Oh yeah.
No upside for us. We're getting destroyed. Painful. What do we do? Don't think of Roddy though. Let's think of the wheel strategy, right? We own the underlying. Our calls are in the money. How do we manage that?
Hey, RD, can I just interject just one thing before we move on?
Yeah.
I think it's just important to understand why you're doing the wheel to begin with. Meaning, are you doing the wheel because you like the equity, you don't mind being assigned and having it, or are you doing the wheel strictly for income? I think that before you're starting the wheel on any kind of equity or any kind of thing, there has to be a premise of why you're doing it. If it's because you like the equity and you don't mind owning it at the price that you put the put at, then the bag is not a bag. It's just the opportunity that you got to purchase that below the price it was when you put in the put. If it's strictly an income play, then it's all about the math, meaning holding it is opportunity lost. So there's money that perhaps is being lost because you can't employ that for future wheels and or other option strategy. So
Yeah.
if you're strictly doing income, then it's simply a math equation. How much does it cost me? Where is it at? And what opportunity cost do I lose going in the future? And then I think on the flip side, the same thing is true when you're asking or answering this covered call question.
And Double D, if I could just make a point on that too. This is why it's very I don't want to say dangerous necessarily, but you have to be really smart if you're using your entire portfolio and you need income to sell options. That is a very risky strategy to be able to depend on regular income all the time when you cannot guarantee how stocks are going to move. Now, if you have a portion of your portfolio that you're generating some extra cash flow with options, that's one thing. But if you're all options and a few of your picks move hard against you, and you need to take income on top of it, you're likely really going to damage your portfolio. It's much better if you have the ability to have flex in time to wait for some of these things, like you said, that you're going to own an equity now, and you're going to have to be patient with it. So that's a side note for listeners. If you're going to use your whole portfolio and churn out options, you need to really be careful about that and think lower IV, et cetera, because these stocks are high IV for a reason. If you're playing in the high IV space, and that high IV does not mean up all the time, and it can be either direction. And both directions can put you in a bind, especially when, again, you're having to pull income all the time. You can really catch yourself in a bad spot.
May I ask, SB, is there a percentage, not of your portfolio? I have that sort of figured out, and that was great advice, and thank you. And by the way, good morning, Ambassador. But is there a percentage of goal for gains for the year that the beginner to intermediate person would like to earn? Like, what's a good goal for gains in their options portfolio?
For me, in the options portion, my goal is to try to double the return of the S&P.
But what about for someone like me who's just like a few months in? Like, what would you say a good goal is?
100%. 100%. Double it up. Come on. Set the bar high.
Yeah, I think to piggyback on what SB was saying, if your options income is derived strictly from doing the wheel, he is 100% correct. It should not be 100%, but there are, and I know this isn't the session for it, but there are other options plays or strategies that are fixed both in loss and gain that you can employ either in part or parcel of doing the wheel that are basically strictly income based on a regular basis.
Oh,
Agree.
okay.
Different animal.
Right.
But
Yeah.
agree.
I just didn't want it to sound like you couldn't have an account to do income or generate incomes from options. You're 100% correct. You wouldn't want to do all in wheel, and especially not all in like one equity in that, because you could get stuck and then not have income for months at a time. And then parabolic. Yeah, I think if you're selling options and you're being as active as you are, if you're not doubling up the S&P, then you're spending a lot of time and effort that would, and I'm not saying that you're doing it wrong. I'm just saying that should be definitely the goal, minimally doubling the S&P.
Oh, so that is that wasn't a joke. That's the goal. Okay, gotcha. Thank you.
All right, I need to circle back to question 1 because no one answered it, so I'm going to ask it again. Covered call, we get in trouble, we're in the money. What do we do?
let
It's
it
the
get
same
assigned.
choices as the put. It's just in the
Yeah.
opposite direction. You want to move out and up and try to break even. And you talk about this often on your Friday plays. Do you want to try to break even? Do you want to try to make $1 or $2? Do you want to sell your role actually well in the money? Really sacrifice a lot of extrinsic, but you're in it intrinsically, thinking maybe there's a pullback, which we might see today, which will be helpful in a lot of positions. And the other is what a lot of us did this past week, which is roll up and out some and still contribute to the play. And if you have an underlying that's gaining along with the stock movement like zebras or Roddies, then you actually have that gain sort of built into your setup if you did it well, if your delta's high enough. But, and the others, if you own shares, this is the wheel, you let them go. And I did that with 500 shares of USAR. I just had a little wheel play on those. I ran some puts, got a sign at 1550, rolled it back out calls the next week at 1550, rolled through that for about 3 weeks, I guess. And I couldn't roll them for a credit anymore. I kept it at 1550. And in 3 weeks, I made like $827 of profit on that. So it worked out great, but you got to let them go. I wasn't going to roll for a debit on a wheel.
It's looking like you made the right choice looking at the open right now. But all right. So that being said, obviously, yeah, it sounds like managing trades that work against you, case by case basis, is always really the answer. And it depends on everyone's situation. But to Ann, obviously, and any follow-ups, feel free to let us know in the Discord. I'm going to go to PJ's question. And I've never really done a covered strangle per se. But if you sell a call and sell a put at the same time, would you even consider that still part of the wheel? Like, do we call this covered strangle on the wheel? I don't know. Does anyone do covered strangles, and how do you treat it?
Yeah, I do them. I do them all the time. It's just an extra way to generate more income, honestly, at the end of the day. It's just like as long as you're managing your buying power correctly, so maybe hopefully staying around 50% buying power, you're never gonna get yourself into too much trouble if you do end up having to get assigned the short put side. But it's just similar to running an iron condor or something like that, where you're just trying to generate as much premium income as possible off the overall position. And then it's also, if you're bullish on the position, I'll be selling puts, but if I'm not bullish on the position, I won't sell puts. I'll just have the covered call premium instead, right? It's like
if you had a week like last week, how would you handle it? Like, would you sell at the money calls, out of the money puts, or how do you handle the covered strangle?
Oh, same way, just like 20-30 delta on each side.
Both,
usually,
no matter what.
Yeah. It's just I look at it as what do you want, like wings on one side or the other side, right? And I think we're going to get into this in a little later, but it's like it's all about deltas, right? So selling a 20 delta put is going to give you the exposure of having 20 more shares long in the position. So if you think it's going to go up, you're going to be able to get some upside from that, as well as generate the income from the extrinsic value in the premium.
Yeah, I have one on my my hut position, and I just really literally view it as two separate things. I don't view it as one. So I treat my sold put side just as if I was just doing strictly, selling a put to start a wheel, and on the flip side, I do the same thing on the sell the call side. I just treat that's just a covered call on my 100 shares, and I view it separately.
Yeah, no, same here.
ROD, you do without even like saying it, you do these covered strangles on on your wheel a TSLL, meaning
Yeah.
all it means is you own 100 shares and you're selling a put and a call at the same time, typically the same expiration date. So you do them without even like calling them that. So it's just when you own something, you're willing to sell a put on it, be assigned more shares, and you're selling a call above it to generate more income. So where Rob was talking about, it's just a way to generate more income while you're holding shares.
Exactly. Yeah, I was just gonna say that. I'm selling a bunch of puts. I'm selling a bunch of calls. I guess technically, it's a covered strangle, but to me, it's just the wheel, right? But maybe if you made the trade at the same time on one trade, technically, maybe we call it the covered strangle. But again, I guess it doesn't matter, right? Okay, so I just wanted to cover that. And
can I go back really quick?
Yep.
I like it just as your follower and listener. I really like it when you call the strategy by like it's a name and by the name that you've given it, or the the branding that you've given it, like you did with, I'm trying to think when you did it last week, what the example was. It might have been even on the Roddy where you said technically it's this and this. And we call it the Roddy here. Like when you pair that up, it helps with the learning.
Yeah, like the synthetic combo collar, or this.
Yeah.
Yeah, I know. There's names. That's why I just come up with names, because I don't know. This is just too much, But
It is.
Rod, you gave me a hard time with that one from the get-go.
Yeah. Yeah, we had to, like I always say, SB's invention here, but
Synthetic collar.
yeah,
Synthetic collar.
synthetic collar. There you go, from the man himself. But yeah, I'll try to do that more often when I can. I'm not saying I know every term and definition of what I'm doing. Plus, I'm only on the sell side. But real quick, let's go to bag holding. Obviously, it kind of goes into question one, really. When we're selling puts and all of a sudden, we get into a war with Iran and the market tanks, right? So if you're bag holding, is anyone bag holding? Maybe we'll just ask that question. And what are you doing? Do you just wait it out? And I know it's kind of repetitive of the first question, but what is an example that's in your portfolio that you would be willing to bag hold, or you are bag holding and you're okay with it?
I don't think I'm bag holding anything right now, but it basically boils down to two things. One, do you think it's going to come back? If you think it's going to come back, then maybe you hold on for a little bit. But and Rob touched on it earlier. Do you think it's going to come back? Two, you have this money tied up, sitting there doing nothing. What can you be doing with that money otherwise if you're not holding it? So it's that question you have to ask yourself. And if it's I'm not sure when or if this is ever going to come back, then you just got to kind of bite the bullet and cut the loss and reinvest that money into something where you can start making money on it again.
Yeah, I'll put out there that I'm bag holding IBIT.
This is such a complex issue, and it happens to all options traders that have been doing it for very long. It's just kind of like having a wreck. If you drive a motorcycle, it's not a matter of if, it's just a matter of when. It is going to happen, and so it's just, again, those variables. What's your time horizon? What is your ability to be patient? What is your thesis again on that sector, on that ticker? All those things are variables that have to make the decision. And I'm bag holding not on a wheel, but Zebra and Roddy strategy on Microsoft and Meta. and I have those plays out to like September, December. And because they're Microsoft and Meta, I have just decided I'm going to be patient on those and wait. And they've made some nice rebounds last week. We'll see how it goes. But not as patient on some others where the thesis for the stock wasn't as strong. And then you have next levels of decisions to do. The bag holding. Do you drop down and sell cover calls below your strike? Do you try to create a buffer or safety on that and sell those calls and then buy a diagonal, a call further out in time to protect somewhere in the middle of that gap, depending on how far down you are? Or you just sit and be patient and wait it out, or you cut them and move on. I mean, those are individual case-by-case basis, and they are difficult decisions to make.
Agreed, and well said. Obviously, there's a lot of variables here, but yeah, making that decision of selling calls under your cost basis, that's always scary to me, right? And I try to avoid that at all costs, but I always try to keep that delta, rather low. But at some point, it's like, is it even worth it, right? Is it worth it for this little bit of premium, to take that risk, or is it, are you better off waiting? I mean, again, who knows? Does anyone else have an opinion on bag holding before we move on to the good old Greeks?
Yeah, I think it's connected to the strangle as well. Like, you can actually, if you're committed to the position, right? Like if you're running the strangle on it, you're gonna have the opportunity to either average down or continue generating income from the short put side as well, to try and help raise that cost basis, or at least generate income from the position over time.
Is it Rob? Yeah.
Yeah.
Thank you. So if you are bag holding, that's a strategy you can do to still make money on it. The strangle.
Well, it's just I would do it with and I am doing it right now. I'm bag holding Chewy stock. So
Okay.
everyone's got a dog, everyone's got puppies.
Yeah.
I'm like, man, that's a great company too, but their
It
stock has gotten beat up. But yeah, so I'll sell puts below, I'll sell calls above, and I'm below my cost basis right now. And on the call side, I'll just sell call spreads instead. I'll sell, and you bring in less premium income, but you do have the opportunity to capture upside if it does, blow past your call strike. And then and then you just sell puts to try and just keep generating some income at the same time, to try and make up for kind of that lost income from buying the long call side.
But you're below your cost basis. Is that
Yeah.
what you said? So
Yeah.
what if you were what if the price you were at was way above the current price? Then that's what I consider bag holding.
Yeah, I would still do it though. I would still do it. I've done it. I've definitely done it. I look at it like, if I don't plan on selling the shares at this point, like I'm still gonna keep trying to use them to generate income no matter what.
Even
Really.
Okay, so that's like the big burning question for me, is like, wow, my price when I look at some of these shares is kind of crazy. And I think Ambassador was giving an example of that too with iBit. Rod was the first person to introduce this to me. Like, you don't want to let your shares go for too little, or I think that might be on the other side of it, but it's a difficult decision to make, like, to keep going, possibly lose them even at a 20 delta. But there's nothing in the strike range that's even close to what my cost basis is on a couple of these things, and it makes me nervous. But yeah. Thank you.
I mean, it's definitely it's having the confidence that you can kind of manage your way out of it, and hopefully it's not money that you need in the next 2 to 3 months, that if it does get challenged, that you can't roll out a couple of weeks to months to give you that 5 to 10% upside.
Rob,
Yeah.
when you said the call spreads, do you keep all those on the same date, or do you do diagonals with any of those?
I actually do keep them on the same date usually. But yeah, I'll do ratio spreads or call spread. So I'll buy one and sell two, or I'll sell the one and then buy the one further up.
I've been doing those in diagonal, and sometimes that's worked and been helpful.
Yeah, I'm sure it does.
I haven't done just the call spreads. That's something interesting. But again, this goes back to if you're counting on this for income and you wind up in a bag hold position, that makes it really tough. I mean, that is it's just hard to generate income when your strike your cost, or not, when your strike is 30% below your cost basis. There's no premium there to be made.
Yeah, even the premium that is there, it's been cut in half too, right? Like when you're down that much, you're making $100 a week, now you're making $50 a week. What the heck, man?
All right, we've all been there. We're all bag holders, one way or the other, just different times of the year, right? So, Rob, you brought up the Greeks, and a couple other people did. It's something that I'll say is, I avoided in the very beginning, only because I just, when I learned options and you listen to certain people, they're talking, delta this or whatever that, and it's just like, all right, shut up. I'm not using the Greeks when I talk about options, but at the same time, you're going to hurt yourself if you don't talk about it, right? You need to talk about it, especially delta, right? So before we dive into delta per se, what other Greek do you need to, or would you like to explain to the audience maybe that you use and you think is important?
Personally, all I look at is delta and theta. I know gamma is super important. Vega is really important as well, but I really just look at delta and theta usually. And honestly, I look at delta more than theta as well, a lot more than. But.
Do you are you brave enough to explain what theta is?
Yeah, sure. It's the amount of value that each contract decays every day, right? So, yeah. So as the day passes, so even like our our former fearless leader Jay Petrocelli would say, the only thing we can guarantee is tomorrow comes after today, right? You have no idea whether today or tomorrow, the price is going to go up or down tomorrow, but you do know that theta is going to decay off the call contract. So, if a call contract has 0.15 theta, that means it's going to lose $15 per day, and it's going to and actually that theta number is going to increase as time goes by too. So that that velocity of the theta burn increases as you get closer to the expiration date.
And feel free to reference. I'll always have your website up, FYI, during these. So feel free to reference anything I should pull up. Like, I don't know if you have a glossary.
Yeah, do you mind actually if I share my screen for a minute? I was going to show.
No,
I know I'm horrible.
While you're pulling that up, Rob, when you say 0.15 theta equals a $15 a day loss, what would going up in theta and going down in theta equate to? So the higher the theta is directionally related, or is related in direction to the greater the loss. Relative. That's the word I was looking for. The increase in theta is relative to the increase in loss per day.
Yes, the higher the theta, a positive theta amount means that you're going to be gaining that amount of dollar value per day, pretty much.
Gaining. It's not a loss.
Well, it depends. When you're holding a long call, theta works against you.
Okay.
And then when you're selling calls, theta works for us. So that's why in the subreddit for all of the option sellers is called Theta Gang, because we're selling theta all day is what we're trying to do. We're trying to sell these contracts to let them decay over time, so that we can, yeah, we're just becoming the insurance salesman, really, what we're doing when we're selling calls and puts. And well, more puts specifically, are the insurance. Calls are more, when we're selling calls, we're selling bets to people. We're the casino in that scenario, where we're saying, we'll take your bet. I bet you that Nvidia won't be over 205 by April 27th, and I'm going to get you to pay me $2.37, $237 to take that bet. And then on the put side, it's where you're selling the put. You're saying, you can pay me $1.95 or $1.45 to be there to buy your shares from you, and to be the insurance that allows you to be able to sell your shares at $195. But the idea around let me switch to theta here. I'm the horrible salesman. The first thing I do is go to somebody else's website, but OptionStrat has really good. I
tried to throw you a bone here, and
I know, I appreciate it. I wish this part is so technical. I haven't done this part. It's so hard to explain. But you can see right now we just have a short call. This is a covered call position where you have 100 shares, and we're just showing the 205 short call right now. And so you're getting $24 a day over the next 7 days here. Well, actually, we'll go to Friday. So from today until Friday, you'll make $35 a day. But you see, today it'll be 35. By the end of the day, it'll be 37 and a half. And then sorry, let me make this a little bigger too, so people can see. And then tomorrow, theta per day is going to go up to $42, and then $49, and then $59. And so eventually, this contract that is currently $1.98 will eventually be zero, and then it's like the last day, and there'll be zero theta left on it at the end of the day. So yeah, so that's yeah. Sorry, go ahead.
You can also describe that as extrinsic value, right? That's another way.
Yeah, exactly. Yeah, that's exactly what it is.
That's
time
so
value.
Because extrinsic value, Rod has shared that with us before, and I wasn't sure where to find that in Fidelity. Ambassador, maybe you know where that's at in Fidelity, if we stick around with Fidelity. But right, extrinsic value is the exact same thing as theta then?
Extrinsic value is
manifestation of theta.
Yeah, it's the theta is decaying the extrinsic value over time, pretty much, right? So so if we're looking at a call here, the intrinsic value is the price from the underlying price to the strike price, right? And so if you're in the money, you're going to have extrinsic value. If you're out of the money, if you're above the strike price, you're going to have no intrinsic value. But then if you're on the but they all have extrinsic value. There's time value on all of them, no matter what. And the closer to the money, the higher the extrinsic value. Also,
they have extrinsic until you get to a 1 delta.
Okay.
Right, and then they don't have any more.
Okay, and then Rod, when you were showing a live trade a while back, and you were making the decision based on extrinsic value, what's your benchmark for extrinsic value? We always say a 20 delta, 20-30 delta for the wheel. What's the number for extrinsic value?
Well, when I'm rolling the position, since I do weekly options, I mean, to keep it simple, honestly, I do it at Friday in the afternoon. The extrinsic value is basically at that point under 0.1 and dwindled down to nothing, whether or not, I guess, regardless of how the position lies in the money, out of the money. But typically, yeah, we want that theta to decay or the extrinsic to go down to almost nothing. So you technically earned all of them, that extrinsic value in the position, right? So like I said, to keep it simple, I make all my trades Friday in the PM. right?
Mhm.
And it like obviously I work full time, so I can't always do it at 3 p.m. or I can't always do it at 2 p.m. But if I always have a set rule, all right, I'm gonna do this, then if unless I'm like moving a position or doing something different with the position,
Mhm.
that's kind of how I handle them. But yeah, I know I haven't done the tracking. I used to do the tracking day by day, right? The change in extrinsic.
Yeah.
And maybe that's a example to, to do going forward, just to explain further to people. But yeah, I don't know. It's a tough
job.
topic, but
Yeah, I don't know if you necessarily need to add that. I mean, you can get the feedback from your followers, but I feel like without it, it's been pretty good too. I
now
just
looking at this though, let's try to dive into like an example.
okay.
Maybe like parabolic. What are you trading now? Maybe Rob can pull it up. Or is there a stock that you'd want to pull up?
Well, we can look at AXTI. I mentioned that. It's one I'm most excited about.
Okay, so what is your cost basis? Just
Oh my
curious.
gosh, I gotta look at it.
All right.
Pull
Well,
it
let's
up.
just say like maybe it's 80. I don't know. But so let's look at like do you sell weekly covered calls? Maybe we'll just look at Fridays and then see what kind of
The way I decide, to be honest with you, is just strictly based off of super red or super green. I have a list, and I only trade the optimal tickers that are moving most aggressively in either direction. So just pick. You can pick whatever. I'll let you know what my
These
cost
are
base
really
is.
expensive.
What?
This is crazy. This is Oh, the implied volatility is 220%.
220%.
Like, whoa, this is crazy expensive.
Parabolic don't mess around, man. She goes for that premium.
What is that ticker? What is that company?
It's I don't know, something in the tech. I don't know. I can't keep track of everything that way, SP. I'm just going off of the colors.
Single element semiconductor.
Hey, while you're all talking about this parabolic, just so you know, when you're on the options change on Fidelity,
Okay.
you're looking at the dates area on the options chain. Over to the right, there's a little icon that says settings.
Mhm.
If you click that,
Oh,
you can
okay.
add the other Greeks onto their display page and or take off some of the stuff that they have, so then you can see what it is that you want to see.
Awesome. Okay, got it. I appreciate that so
Of
much.
course.
Looks like it's a
Could
semiconductor fund.
Could I just say real quick, as we're talking about this, just keep in mind that all the Greeks, the deltas, the thetas, and all those are just the best information we can have at any moment to try to make the best decision we can make.
Mhm.
But they absolutely do not move in a linear fashion. That they are not to be thought of as rules and rock solid
Okay.
at all. That they change constantly. Now, it's the best information you can have maybe in a moment, but one tweet or truth, one news like the ASTS, the satellite was dropped in the wrong orbit by Blue Origin yesterday afternoon. Now the stock's down 11, 12% overnight. These factors that happen can be and are really unpredictable. And
Mhm.
so you just, again, which is why I'm taking regular income or counting on it from selling options, and especially in tickers that have any IV at all, is just you can gain over time because they're great opportunities, but to count on it every week is very I don't say dangerous. It's very difficult to do that. It's very difficult to expect that after you've traded options for very long.
Yeah, I don't trade options for income. I just trade the options for my account growth. But I know there's a lot of people out there do. I mean, I know that's how Rod's teaching us. But
This stock, by the way, sorry to interrupt, is up 7,000% in a year. Wow.
I'm
Chances
at
you're going to be a bag holder on that are really good. I'm just saying.
I'm on a $40 put for May 15th. That's what I have right now.
Interesting.
Do you own any shares?
No. Oh yeah, I do. I do own shares in my other account. Yep. Dang it. I don't know.
Okay.
Yeah.
Yeah, I just wanted to maybe look at a call, like just an example of selling a covered call. Look at the extrinsic, look at the delta, the theta. I don't know
Yeah, I'll go
what
to
the best screen is. Now Rob's doing all the work, but I appreciate it.
Well, can you do the
Don't
work
worry,
on the put side so that because I'm not expecting assignment, so I was wondering if we can look at a put if we do it.
Okay.
No one owns 100 shares of this right now, so what we could maybe sell a put on it.
All right, so let's look at the put then. Let's go. Yeah.
While you're looking at that, I'd love Rod's input on this. Typically, if I'm in some type of income strategy, I am looking at doing some active management when the delta goes from where I sold it at and starts to breach the 35 delta. Am I off on that thought process, or would you concur, Rob?
I think that's a good time to roll. I think you're still out of the main. It's there's something called like the at the money bell curve, right? There's let's see if I can find it, but it's literally this right here, right? So when the price, let's say your contract strike is right here and the price is right here. This is where the most cost to buy back your option would be, and so you're doing it a little bit, off to the side a little bit. 35 is not quite at 50, right? So you're getting in front of it, and you're trying to keep it, probably in that 20 delta range, right? So you're like constantly moving it down whenever it gets too close. Some people wait till it gets over, and they wait till it gets to the other side, and then they start kicking it out then. But I think honestly the worst time is just to do it is to buy it back when it's at the money, because that's when you're paying the most for it. So it's a little bit harder to find a credit when it's like exactly at the money. But also at the same time, if you're at the extreme, if it's too far in the money, it's hard to roll as well, because it can get past it, and then it's hard to like catch up to the extrinsic. Yeah, and so it's hard to catch back up to the bell curve if you let it go too far past, and it's like way off off to the side down here. It's hard to get back into the meaty part, right? Because what we're selling is time. We're selling the extrinsic in the middle.
This is a helpful visual explanation. Ambassador, I missed your question. Were you asking about percentage?
Well, as I think SB was saying, which is so important, that these Greeks are like a snapshot. It's like taking a Polaroid picture, and they change throughout the duration of your trade. So what I was saying is that in a trade that I'm having, especially the ones that I'm doing for income, if whatever I've done has a certain kind of delta, maybe I'm in the 15 to 20 range-ish, when one of my strikes is being threatened by the delta now changing to like 35 or 38 in that area, that's when I'm looking at doing management on it for the income things, whether I'm rolling, whether I'm closing, whatever I'm doing to it, I'm looking at that time. And I was just, since Rob is so much better than I am and so much more experienced, I was asking him if that was like a crazy thought process or that had some legs.
Oh, thank you. Who's sharing their screen? Is this Rod right now sharing?
Rob.
No, that's me.
Oh, it's Rob. Okay.
R to the O to the B.
Yeah.
Yeah, I just wanted to try to show. Actually, I'm just gonna refresh real quick. I want to try to show like how delta does change over time, right? So the idea, so just from a really high level, I excluded this. So we just have 100 shares, right? So we have long 100 shares, and I have this chart. This chart is broken down to deltas. So it's showing we have 100 deltas now forever, and forever and ever. This is the power of having the rich man's covered call versus the poor man's covered call. As long as you have these shares, you have 100 deltas of this stock. And then you come in and you sell the call. We'll include this, and we'll sell this. We'll go down to the 20 delta. That's 30. 7. That was fast. That went fast. We'll just sell the. We'll do the 30 delta. So,
Yeah.
where are we going? Oh no, 17 delta.
Sorry. That was for Bruce. Nah.
Yeah, so we're selling the 17 delta at the 210, right? And so when we're at the current price, we're minus 100 minus 17 is 80 deltas. So we have 80 deltas of exposure. As price goes down, the call delta is going to go lower, and it's going to end up being like a 10 delta or a 5 delta over time, and it's not going to be applying as much of a hedge. That's why people say covered calls aren't the best hedge, because they're only a temporary hedge. If it actually goes down, it only covers you for the amount that you sold, right? So you don't, those deltas go away as price goes down. And then as price goes up, your short call is going to increase in delta. So if the price actually goes up 4% here to hit your strike price, you're going to be sitting at 50 deltas or so. So similarly, you want to kick the can out, right? So you want to buy this back. You'd want to buy it back for whatever the price is. It would probably be $1.75 or something like that, and then sell another call a little bit higher, but for the next week out, or we'll just say for the next month out, so you can actually get some more credit back, and you'd be at a 25 delta instead of a 50 delta.
Okay, I did this last week, and I think Alan commented on my post in Rod's Discord, where I was just kind of busy rolling, and correct me if I'm wrong.
Like USB, sorry. He's gonna go.
Oh, by SB, thank you. I was rolling I was rolling calls because I anticipated that this week was going to be red, and it is that's an example of what you're describing here. Okay.
Yeah,
okay.
Exactly. Yeah, you'd buy it back for the loss, and then you'd sell another call for a further week out.
Well, I was up on them, and if I would have let them expire worthless, I would have made a little bit more money. But I wanted to roll the premium into this week, thinking I wouldn't get the opportunity this week if it was a red week.
Sure.
I don't sell calls on anything typically if it's too red. So, okay, I'm following you. Thank you.
Yeah, sure thing. Yeah, and this example is really just to show that it moves. Sorry, go ahead, Rod.
No, I was just gonna say that, like, the parabolic, I always think it's good. Like, and maybe we could do this in another video. If you want to provide us like an example or situation that you're actually in, the best ways to trade out of it, roll it, things like that. I think that would be, especially with Rob and his expertise, on these various websites, because it's obviously deep in the weeds. He's kind of going to so many screens so fast.
He is.
But
he's moving quickly.
But maybe, so think about it, parabolic, maybe for next week, like whatever positions you're in, maybe we can talk about that and say, okay, what is the best? Or I'm in the money here. Should I roll it? Is it worth it to roll it? Is it worth it to roll it at the money, out of the money? I don't know. There's just so many different scenarios that anyone could be in at any time. And I think the best way is to actually just use a real one, right?
That's cool. Thank you. I appreciate the opportunity with all of you. It's tough to have the conversation on Sunday when I'm making those decisions on Thursday and Friday, but there'll be some strikes that are out in May that we could talk about for sure. That'll be cool. Thank you.
Are you saying you want the options roundtable on Thursday morning? Is that what you're saying?
No, I can't do that, but anytime I can get with this panel is a gift. Thanks.
Okay. Rob, if you want to go back, I want to real quick. Obviously, I respect your time, respect the website. Do you want to just tell people about your website?
Yeah, sure.
I want to give you an opportunity to let people know, because obviously, Rob put a crap load of time and effort into his website, and he still does every single day, and it's so impressive. I wanted
And money.
and money.
Yeah,
He's got to make it back, guys. So let's help him
please.
out here. So if you want to just give like a 2-minute tutorial, if you want, it's up to you.
Oh, sure. Thanks, man. I appreciate that. I was just ready to shut it down.
Yeah, while he's pulling that up, I just got to give my highest, not that it matters, my highest recommendation. It's a great website, and the cost is so small.
Thanks, man.
Nice.
Yeah, I've been building this. Honestly, I started selfishly building it for myself in all of the option trades that I like to do. So at some point last year, and I've just been adding on, a whole bunch of different options features, and even dividend portfolios too. I know we probably still have some speaking of bag holders of some YieldMax and some Neos funds and things like that. I have a whole section that will break down dividends and look at the income analysis, analysis of the ETF versus the underlying and all that fun stuff, and pulling up all the information that you could ever want to know about the covered call positions or the covered call ETFs, but really mainly focused on the option side lately. So you can come in, you can screen for any options. It's all live data. I've really built it in a way that I think that, at least for me, that's the way my brain works, is like, this is all the information that I want to see. I want to know, what's the expected move. I want to know what's the IV. I want to know if I was to do this every, repeatedly, what would be the yield for this trade, but would it be annualized? Interesting things like if you're actually assigned the shares. Just trying to make my life easier on how I can find new trades and try to figure out what the state of the world is and figure out what's the good trade of the day, and trying to ideate all these different ideas and just trying to generate income all day, like all of us are all trying to do.
So the website is StockTools.app. So you have a free version and a paid version, or multiple paid versions?
Yeah. So there's really just two versions, right? There's just a free and a paid, and it's free. If you want to try it out, you can create an account. It's free for 2 weeks, no credit card required. You just create an account, go kick the tires on it, and you can use all the features. Everything's available here. All these different calculators, and like really cool portfolio builder where you can go through and pick a bunch of stocks and select an allocation, and it'll tell you how much you're going to generate in income through the year, and all these different tools that I think all of us income nerds want to use, I guess. But yeah, portfolio is very much under construction. I need to work on that a whole bunch, but I would say the options dividends are super powerful. There is like a whole rolling engine in here too that I was trying to pull up. I could talk for any of these sections. I could click on anything and talk about it for an hour if you let me. So I don't want to go too much in the weeds, but you can come in and put in your trade, and it'll break it down and figure out what your intrinsic versus extrinsic. It'll look at all of the Greeks and try to figure out, okay, are you
Oh, wow.
what's your days to expiration? Should you be rolling or not? And
Oh my gosh.
and then they'll look at all the different inputs and try to generate a score based on that, and then has a way to then look at all options to roll, and actually have some like pre-built rolling strategies in here around whether you want to.
Will you please scroll back up to that
Sure.
list of criticals? Oh my gosh.
There you go. There you go, parabolic.
Yeah, pretty much. Yeah.
This looks like, from a nurse perspective, this looks like my critical lab values that I'm concerned about at 4 a.m. Like, I want this.
Right. You just want to see like clearly what are the outliers? What are the things that are bad that we need to worry about right now?
Position analysis. Thank you. This is very helpful. I'm gonna check it out for this for sure.
Yeah, try it out.
I need to link those into my spreadsheet.
Wow, that was crazy. Thank you so much.
Yeah, you got it.
Ambassador, don't you think that'll help?
Yeah, I'm a full buyer and believer in his website, and it's only getting better. And the other great thing about Rob is if you email him or message him and you say, hey, this isn't working, or how about this, he responds. He's just simply amazing.
I've just never seen anything like that position analysis before.
Almost like
Yeah.
it's almost like a triage, right?
Yeah, exactly.
Triage
Exactly.
list.
Wow, that really
Right.
speaks highly to me. Thank you for sharing this.
Yeah, you got it. Sure thing. Yeah, it's cool. It's been like, and that's all the things you want to know, right? You want, like, even in these little cards, is trying to figure out, okay, what are the contracts we could roll to? If I did roll to these positions, what would change, right? You'd see, like, okay, I would get 30 deltas back. You know, my theta per day would increase to $9.75. You know, like, and things like that.
Okay.
The stuff that
Very
we care
helpful.
about.
Yeah, and
Wow.
to everyone in the community, if you have suggestions for Rob, you know, feel free to either type that in the comments or head over to the Discord, tag him.
Yeah, please do.
He does listen. Again, he's one of us, right? And he's just building a website for us. So really, I mean, and it's very powerful. It's beyond my expertise, but I'm trying to learn each and every day. So I appreciate every time he shares. I know Ambassador kind of started a series. Hopefully that continues at some point. And then we can get everyone,
Cool.
you know, to learn more about options through your website, or, you know, even through just the discussion in general.
Yeah, and you know, as a beginner, this website is very intimidating. So the entire time that Rod's been, you know, sharing this information, I've kind of had a bit of a you know, learning resistance up to it because it's so overwhelming. But you know, all you need is just like one piece of data in the site that's useful in the decision process that saves or makes money. It's all about the money.
Yeah, and honestly, it's really good feedback, because this is also, it's like I said, I've been building it for myself, and I haven't done enough like user testing and like trying to make sure that like this is an accessible experience and people aren't like, what the heck are all these what are all these numbers?
Yeah.
What's going on? This is overwhelming. What are all these lines on the chart?
It's intimidating.
What's
Yeah,
going on, right? So
I'm glad you went
it's
through
a
it.
lot.
Awesome.
All right. We are over time. I appreciate everyone's time today. As always, it's always a good time. I want to go close out comments around the table to see, you know, if you have any final thoughts. Obviously, I hope to have you all back on, and others who are available maybe next week too. I don't know if we should just keep this going or skip a week. But let me just check in on Double D. Double D, are you still alive? Are you there?
I am still alive. This has been a great conversation. I haven't had a lot to say because everyone's saying what I would say, and I don't want to be redundant or anything. I definitely think you should do next Monday. And I think what you said, you know, like actual do case studies with, you know, like for parabolic, what do you own now? What are you thinking? Or, you know, what are we doing this week with actual, you know, tickers and strikes and deltas? And I think that would be very helpful.
Oh my gosh, case studies. I love it. I love it.
Yeah, maybe that'll be the header of the thumbnail. Wheel strategy case study. Continuing around the horn here, Alan. I'm going in reverse. Alan, the retired guy.
Yeah.
Any final thoughts?
No, I kind of piggyback off what DD was saying. Like on the first half, kind of your thought processes was good, and I was quite good on the because I'm weaker on the technical side, so this kind of listening on the technical side, like kind of listening in and trying to take some of that in. And I have to get off my butt and get on Rob's site. I've been promising myself to do that, but I haven't gotten around to doing it. But but yeah, and I think doing like some case studies and stuff like that would be great. Kind of looking at like real life situations would be great.
Okay, cool. Ambassador, or best day ever, should I say? Any
Sure.
final thoughts?
Just always an honor to be here. Love the people on the panel. Appreciate you. Hope everybody has their absolute best day ever.
All right, Parabolic, are you up for the challenge of the case study?
Most definitely. Yes. Thank you for having me. And I just appreciate being given the opportunity to ask the questions, and as they pop up in live, you know, in the live as these pros are speaking. Just really appreciate it all. Thank you so much.
And back to Rob, full circle. Any final thoughts in general?
No, just thanks, guys, and manage your deltas.
All right. And thank you to SB who had to leave early. Appreciate his time as well. As always, none of this is financial advice. We are not financial advisors. We are just coneheads. All right. And we're here to have fun and entertain you. So hopefully you guys had fun. Hopefully you're entertained. If not, come back maybe next week and we can have some fun with Parabolic's portfolio if she's brave enough. Outside of that, I'm going to kind of skip the song today and head straight to the keyword. So the keyword today, if you made it this far in the video and you want to prove it, you got to say the keyword. You have to say the baby. Anyway, the keyword today is if you have suggestions for StockTools.app, that's the comment. All right. That's what you got to do. So I'm giving you work. Recommendations for Rob's website, since obviously he showed you a bunch about it. So in the comments down below after this video is posted, whether you're on X, whether you're on YouTube, feel free to type in some suggestions for Rob, because he does listen. If you're too lazy to think about that, then the keyword is the website, StockTools.app. All right. I'm out of here. I just wanted to say thank you to the roundtable for joining today. As always, it was fun. I wish I had more hours, but we'll have to cut it, at 1. But I appreciate all of you. I appreciate everyone joining the live, and I appreciate everyone watching after. We shall talk later.